Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, February the 3rd. And we have just gotten the month going, and it has been crazy, crazy, crazy. Um, really, this whole week has been crazy, and I want to talk about that. We'll look at the S&P, kind of see where we are. I mean, we're right, knee deep into earnings season. We just had Google and Amazon yesterday, and of course, lots of others, still to come. So we've got all of that on our, on the horizon here. But let's look at the S&P and get started. And what we've got here today is, we ended up on the day on the ES up about 12 points, I guess, something like that, roughly. But we came out of the gate, chopping, pretty good, pretty hard fall, kind of stopped in the middle of nowhere. I really didn't have a lot of levels down here. But then all day long, we just do this channeling thing, and we did the same thing yesterday. And then we chop, and failed. Here, came up, kind of chop, and failed. And that's kind of been the pattern that we've been looking at a lot lately. I've seen a lot of those very end of the day kind of sell-offs, and I don't really know what causes that. It just typically is, or it's been pretty common that that's been happening. But let's go a little deeper and look kind of what's more interesting. Here's a 5-day chart on the S&P, and if you notice down here, this is 36.94, and we hit 38.47 today. So if you look, that's Friday, that's Monday, that's Tuesday, that's today, Wednesday. So off that low on Friday, we have gone up 153 points. I mean, straight up, just boom, big gap, and then then some chop here. And so that gets us kind of back to where we are now. And what do we think is going to happen next? And if you look above us, just slightly above us here, is we've got a Voodoo fire line at 38.76 on the S&P. And let me see if I can find my S&P chart real quickly for us. So if you look here on the S&P on the fib level, this is a daily chart. And it's kind of funny how the fib levels match up in a lot of cases with the Voodoo lines. And the Voodoo lines are based on Elliott wave, and fib levels are different. But if you notice up here, the 1618 extension at 38.74, that's SPX on the daily. So that's our next stop. I think we've already been there once, so I think we come back up here, hit this. Maybe we take this out. There's 3900 on the other side right there. Now that would be a big round number if we can take that out, and I don't know that we do the first time. We kind of like here, you get close, fail, come up, hit it, fail. So do we come up here, hit it, fail, finally get through and then come up there? I don't know. Or do we just rip straight through and go to it? But the 3900 is a big round number. The 100s, the 37, 3800, 3900, that kind of thing. Big magnets that attract volume up there, and so we could easily get up there. And then on the other side of that, we've got a 1272 at 39.18 on the SPX. So, at this point, I would not want to be, I don't want to be shorting this thing. And now we have, to talk about both sides of, of the trade. I can make an argument for either side. Look at this. We've come up here. That's our Voodoo line. This is 38.70. So chop, smack down here, right into our snow line. Snow line held, and right back up, and it looks like we're going right back to here. This is Wednesday, so do we get there maybe Thursday, Friday? I would be more inclined to say yes, honestly. We have a 40-point expected move into Friday, and right now we closed at 38.30 plus 40 gets us to 70, and if we get that close, we're probably going to reach up there and touch it. So, depending on if you're playing this short term or you want to trade it, tomorrow you could buy, if we dip, you could buy it for a Friday target there, and that's reasonable. The math makes sense. If you're trading it. Otherwise, I would just kind of keep looking higher here and maybe buy the dips. I have been. Let me get this on a longer term time frame. It's a little more. We've talked about this. I mean, look at this. Look at this level from the low 21 up to 39. I mean, that's a massive move off that low. But we're almost there. So don't count that out. I don't think, other than some kind of crazy virus news, political news, we're far enough along in earnings that there's not going to be, I don't think, any meaningful surprises to take us down in a crazy kind of way. I don't believe. Now something could come up, of course, tomorrow that we don't know about, but at this point, I don't see any reason why you want to go short on this thing. As we go higher, and I am looking for higher numbers on the end of the year or later in the year. Absolutely, we could have some pullback, and I'll try to fade those when I can. But for right now, I don't see a big reason to get super bearish. Again, you guys know that I play this thing kind of light and very nimble anyway, so I don't have a tremendous amount of exposure, to need to hedge. If you had a bunch of long stocks and you were a little worried, yeah, I could make a case for justifying, some hedging down here at one of these snow lines, maybe here to here, maybe here, but that's a long way down. I don't see that happening. So anyway, I did want to focus on the S&P. We could talk about some of the different stocks around earnings and that kind of stuff, but those are earnings trades are always a coin toss. So with that, let me wind it up. Just want to kind of hit the highlights on the overall market using the S&P, and as always, be nimble. Trade your aggressiveness to your account size and use tight stops and that kind of thing, and just manage your risk. That's the whole key, is managing your risk. So thanks for your time. I appreciate it, and I will see you guys at the next update. Take care.